This is your 3-minute real estate market update brought to you by First Coast Realty. According to a recent survey in the Wall Street Journal, recession fears are surging. This survey stated 3/4 of global CEOs say that we are in a recession or will be in the next 12 to 18 months. So what does this mean for the real estate market? Well, historically, during a recessionary period, interest rates go up at the beginning of the recession, but in order to come out of the recession, interest rates are lowered to stimulate the economy moving forward. This chart shows the most recent past recessions going back to the early 1980s, and there's one thing that every one of these recessions has in common. It's that in each instance, mortgage rates fell. In many cases, they continued falling after the fact, as it takes some time to turn things around, even when the recession is technically over. So yes, interest rates are following their historical pattern and rising, but could fall again if or when we enter a recession. For our second topic, we're going to address where is the market heading. Let's start first with offers received. We're seeing that number decline. It peaked around an average of 5.5 offers in April, and now we're seeing about 4.2 was the latest numbers released in June. 4.2 offers per home sold is still far above a pre-pandemic norm, so it's definitely still a competitive market, but we're seeing a little bit of that softening. Now let's look at offers over asking price. A month ago, 61% of offers were over asking price, and that number has softened now to 55%. Now that's still more than half of offers over asking price, so again, we're seeing a softening or a moderation, but definitely not a huge decline as of right now. Sales are also softening. The rate of sales has returned to a pre-pandemic level after 2 years of record-breaking levels. And then finally, the biggest indicator of inventory. Inventory is the biggest factor right now. There's been a pickup in inventory, but it's not from a huge increase in new listings, but rather a slowdown in the pace of sales. You have the same inventory, but with fewer sales, it means more months of supply. According to Mark Fleming, the chief economist for First American, what this means is we should start to see less competition, fewer bidding wars, and therefore less upward price pressure. In fact, a simple analysis shows that a 1-month increase in the month's supply, which is exactly what we've seen this year, results in a 3% decline in annualized house price growth. And our preliminary house price index is already showing moderation in house prices in April. So what we're seeing is, with softening in demand, more new listings, slower pace in sales, more inventory is available. And when there's more inventory available, that tug between buyer demand and supply lessens. So we will continue to see pricing increases due to our low supply, but not at the alarming rate that we have been seeing. So what does all this mean for our local area? Sales are slowing and there are more active listings available than recent months. Average days on market are also increasing and the average sales price is decreasing. This could be good news for buyers, but with interest rates rising, you cannot afford to wait any longer or you could get priced out of the market. To the sellers out there, the market has begun slowing and we have reached the peak of the seller's market. If you are thinking of selling, now is the time. This has been your 3-minute real estate market update. Check back next week for more tips on how to navigate the real estate world.